Hey, it's Tim. It's 9 o'clock, and while U.S. markets are obsessed with the Steve Jobs announcement that he'll be stepping down from Apple, or at least taking a leave for medical reasons, you've got major happenings in the geopolitical world, including a meeting between Wen Jiabao, China, and Obama. Big trade discussions. Obviously, U.S. and China have had a prickly relationship, but I think you can look to the movement in the yuan over the last 4 or 5 months, up almost 3.6, 3.7% against the dollar. This is a very impressive move and should be easing some of the rancor between the two sides. But China, which has been in the news for the hikes in rates and the reserve ratio requirements, actually may be looking at an interesting technical level on the local market, which has had such a tough run. We're actually now at the former resistance levels of last summer, where the market really ran into headwinds a few different times, but former resistance may actually be current support. It's I think a lot of fundamental argument in favor of the Chinese consumer being the more important part of what's going to continue to drive this economy. So stronger currency is actually a consumption boost. We like the domestic names, and especially the names that are focused on the consumer. So take a look there. I think into Russia, you've got a bit of a pullback after what's been a fantastic run, and the BP Rosneft news still resonating quite loudly. The move in the currency is something that people are saying might be a little overdone in the short run, but again, love the ruble longer term. In Turkey, big rate meeting. The Central Bank of Turkey meets on Thursday. Some people expecting a rate cut, and if anything, the sentiment is showing that they are not going to cut and may start to think where they're going to hike rates. So it's not giving the market any room to rally. And in fact, over the last couple of days, that's really been what's holding things back. In Brazil, also, look at the currency. It's been a strong run back in the real, and a place where they are very uncomfortable on the policy front in Brazil. So a market which has actually started the year quite resilient and quite strong in the case of some of the obvious big caps, Petrobras, Vale. I think you still have these same issues which are standing over you. Inflation and some of the credit bubble issues will be real things in 2011, and although I don't think they're going to come upon you right now, definitely keep them close to the fore in terms of your analysis. That's about it from here. Watch the Chinese data midweek. U.S. data probably continues reasonably strong. Thanks.